Now, inflation could be, along with higher taxes, inflation is one of the top questions we've received at LPL Research the last, we'll call it 6 months or so, as the economy's heated up. What's inflation? Just means prices cost more, right? Go to the grocery store. Things cost more, right? Go buy, like my father-in-law sells wings, chicken wings. There's a chicken shortage, right? Wings cost more. Everything's costing more, all right? Go get gas. It costs more than it did a year ago. Again, because we're coming off those major lows. Now, what I want to point out, though, is something on the left. That's Barron's, the I word. That is inflation. That was last month or so. When was it? I think it was May. It's about a month ago in May. On the right, is inflation dead? That was just a couple years ago. All right. So, on the one side, everyone's worried about inflation. On the other side, you've got, is deflation dead or inflation dead? I'm sorry. And we think, we're not as worried about inflation as some other places. Some people are talking about massive inflation, the Fed's printing money. We get all that stuff. I mean, we're not naive to it. We've written and talked about it extensively at LPL Research with our more than 18,000 advisors. The truth is this, right? I mean, here it is. Here's my phone, right? By the time this is over, I could probably, oh, look at that. Literally, I have a Reuters reporter wanting to talk to me. See, that's what I do. I just talk in a room to people all day. Anyway, so where was I with this? Oh, I could order a hot tub. I could literally order a hot tub, right? That's the ultimate deflationary instrument right there, the phone, the Amazon effect. Some of these things, automation, machinery, all these things that have really kept the lid on inflation the last 10 years, they're still in place. Guys, they're still there. So let me get a drink real fast here. So we just do not see massive runaway inflation. More inflation this year than last year? Yes. More inflation next year than the year before? Probably. But runaway inflation? No, we don't see it because these major structural things are still in play. Now, what side are you on? Whose team are you on? There's Team Transitory on the left. That's Jerome Powell and our new president, President Biden. And then on the right, you've got Team Trouble, Larry Summers and Williams from the New York Fed. He used to be on the New York Fed. Now, I think someone in the upper right-hand corner needs to wake up Summers. He's apparently asleep there. But you've got the one side on the right saying, listen, there's a lot of inflation coming. It's going to be bad. All right, Fed's behind the 8 ball. Got the hike rates. It's just going to be a bad situation. Like the 70s. Honestly, like the 70s. And then on the left, you got Team Transitory. We'll see. A lot of history books we've written on this. I'll just say this. I remember 2010, 11, 12. A lot of talk about massive inflation then also. We've got more stimulus this time. No doubt about it. But obviously, we didn't have massive inflation then, and that's our base case at LPL Research. Now, let's say we have some inflation. We've got a blog, lplresearch.com. You all can go to it right now, our public site. 2 client-approved blogs a day. I wrote one just today on some different things about July. By the way, about this. July is the strongest month of the summer. Usually summer months aren't that great. July is the best month of the year for stocks in a post-election year. Just kind of interesting stuff. So that's what I talk about on the blog today. But here's a blog we did. If you wanted to invest to protect yourself from inflation, tangible assets, things like real estate and commodities tend to do well. And stocks, I mean, this isn't like brain surgery. Stocks historically have done better than inflation over the long term, right? So stocks are a really good way. We think value stocks. We like value stocks. Materials, energy is doing well today as crude oil continues to go higher. Those are some groups that can do well. Tips are Treasury inflation protection instruments. Won't get too geeky with this, but if inflation goes up, their bonds, they pay you a little bit more, so that's good. And then bank loans on the side of a fixed income, which I'll talk about here in a little bit. They can withstand higher rates and higher inflation. So